Hi everyone, good morning. In this video, we are going to talk about Leela Palace Hotels IPO, which is coming out today. So you can start subscribing for it from today till Wednesday. So let's do a deep analysis and see if this is basically a stock to buy or avoid when it gets listed in the secondary market. So first, let's look at the entire industry. So the hospitality industry comprises of four major components: food and beverages, travel and tourism, recreation, and hotels. If you look at the company, Leela Hotels has all these things: recreation, they have hotels, they have food and beverage, they have. And in terms of types of hotels, chain hotels, independent hotels, so our company is a chain hotel. And if you look at the segment, there is luxury, upscale, mid-size, and economy. So Leela operates in the luxury space, which is again a very high margin business, and they operate in a majority of the components within the hospitality sector. So now let's look at the market size for the travel and tourism industry. So this industry is at $255 billion in 2024. It is 9% of GDP. So the Indian tourism sector plays a very, very critical role in the growth of Indian economy. So if the Indian economy keeps growing, this industry will also keep growing. And this is an extremely cyclical industry which will basically depend on macroeconomic factors to continue growing. And the industry is expected to grow at a 14% CAGR and reach 540%, $540 billion in 2030. So, what are some of the growth drivers? There is an increase in domestic tourism as well as international tourism. So, wellness tourism is a concept that is taking off. It is growing at 15% CAGR. It is expected to reach $21 billion dollars in India by 2025. And eco-friendly stays are preferred these days. And the branded hotels, premiumization, people preferring to spend more money on high quality hotels is increasing. So there is an increase in this particular concept in tier 2 and tier 3 cities as well. So this tourism industry continues to play a major role in contributing to India's GDP. So in 2024, uh, it was at $222.6 billion. So you can see the share of tourists. So domestic visitors contribute 86% of expenditure, and 14% is by foreigners. So look at the this particular chart. So CY 2028, this number is going to increase. So the domestic travel is anticipated to keep increasing. People are expected to travel more, spend more, and so hotel costs will keep going up. So this is a tremendous opportunity for Leela Hotels. So let's look at the foreign tourist arrivals. So US, Bangladesh, UK, Canada, and Australia are the top countries. Medical tourism is also another thing that plays a critical role in getting a lot of foreign tourists. So let's look at the top performing hotels. So top 15 brands. If you look at it, can you see Leela Hotel here? No. So IHCL, ITC, Radisson, Lemon Tree, all of this is here. And the company with major market share is IHCL. And then we have Marriott. And then we have Radisson. And then we have ITC. So there are a bunch of top performing hotels, and Leela hotels can eventually get into this top 15 because of premiumization, high quality services, etc. So let's look at the Indian hotel industry as a whole and its margin performance. In general, this industry is cyclical. So when there is a boom, the stocks will be at an all-time high or at a 52-week high, and then whenever the economy goes down, these stocks can fall drastically. So this is again a cyclical play. So it is preferred to buy during a cyclical low. Let's look at a listed company, Indian Hotels, and its margin performance. So you can see the operating margins here. So if you look at the operating margin, you can see that it keeps going up and down, up and down, up and down. So during 2008 crisis, it fell drastically. So the margins were close to 0%. And then it started recovering in 2009 from 10 to 2011. The margins improved. And then, if you look at it, it remained in this range. And then from 2016 onwards, you can see that the gross margin improving. So once the industry fell, right, it'll be in the doldrum for several years. It is not something that can recover within 1 or 2 quarters. Whenever the industry goes down, it will take a few years for the economy to recover, for the hotel industry to recover and get back to very high margins. So you can see this here as well. So the margins were low. It started going up in the year in and around 2016, and then it remained steady. And then you can see during COVID, once again the operating margin fell down. And then you can see that this has continuously gone up from 20. So basically, the Indian hotel stock was a very good purchase during this fall because this is a cyclical low. From there, it has expanded. So, how far the cyclical will long and exist is a question that we have to answer to consider investing in a hotel stock at this point of time. So, let's look at the next slide. So, as discussed, this is a cyclical industry. Global events, pandemics, all of this can basically take a toll on this company, and you can lose significant money if things don't work out. If you purchase at a peak, there is a high chance of losing capital. So, as mentioned earlier, the recovery period will be several years. So, you need to be very, very clear if you are going to purchase it for a short-term gain, or if you are going to purchase it for long-term and hold. So again, REVP, if we look at the revenue per average per room, it was again at 68 in 2008, peaked in 2008, and then it fell. So you can see that 70, and then it came down drastically in 2011 to 55%. And then slowly it started going up from 2015, 2016 to 2020, and then there was a huge fall. So from there it is recovering. So the number is basically getting close to a 17-year high now. So basically this in the last 17 years this was the high. We are close to it. So maybe the peak, or maybe we may continue to remain bullish on this with the sector continuously doing well. So this is the peak occupancy in the last 17 years. Let's look at the IPO details. So it is expected to start from today. You can there is a price brand of 413 to 435 rupees per share. So issue size is 3,500 crore. Listing date is likely to be 2nd June, which is the Monday of next week. So minimum you can purchase 34 shares at 14,790 rupees. So if you want to subscribe for it, you should purchase for a minimum of 14,790 rupees. And this IPO has got a lot of attention takers. So you'll see huge subscription. The subscription, we have to wait for the numbers from today. If it gets subscribed for 50 times or 100 times, then you may be in for a good listing gain, but long term, we have to wait. So let's look at the financials of the company. It has grown at 23% growth between 23 and 25. So it recently turned profitable just before the IPO. So many companies typically do this just before getting listed. They try to control expenses, reduce a lot of numbers on the expense column in the income statement, and then show profits before filing the red herring prospectus and before coming up with an IPO. So we have to see for a few quarters this company has really turned profitable, or is this just a one-off thing for the IPO? And then the next thing is ROCE of 9%, debt reduced by 32% to 2568 crore, which is actually a very good thing. Now let's look at the company's valuation. So this company is extremely overvalued at 213 times its earnings. Again, it recently turned profitable, but still, when you look at Indian hotels, which is trading at 74x, EAH, which is another competitor, trading at 82x. Again, this 213x is based on the company's current profits because it just became profitable. We have to wait for a few quarters to see how their actual profits are and what the actual P ratios. Prima facie, at current earnings, it looks extremely overvalued at the current price point. Price to book ratio of 2.3x expensive. So there is an analyst target of 470 rupees per share, which is a limited upside potential from the 435 rupees at which it is likely to get listed. So basically, you can expect a listing gain of 8% if there is a very high subscription rate. So, what are the advantages? Pros: strong brand recognition, turnaround to profitability, debt reduced, it is backed by a reputed investor. What are the cons? It's a very high valuation. It is a cyclical industry which is sensitive to macroeconomic factors. Hence, this industry can go down anytime, and your prices can go down anytime. And there is limited diversification when it comes to Leela because of revenues coming in majorly from a few flagship properties. So, what is our recommendation? So, wait for subscription. So, if the subscription is more than 50 or 100, then the chance of a listing gain is very high. So then go for it. Whereas if the subscription, if it is not oversubscribed for more than 1 to 10 times, let's say if it is subscribed only 1x or 10x, then you can avoid. Only if the company has a 50x, higher than 50x subscription status, then consider buying this for just for listing gains, which can be 5 to 8%. For long term, this is not the right time to buy this stock. It is a good long term bet, provided that we saw all the numbers. So the industry looks attractive. So the tourism industry will keep growing, and domestic travel is also increasing. People are spending a lot of money, but we have to wait for a few quarters and see how the results are coming out. Is the company continuously showing sales growth? Is the company showing a proper profitability, or is this just a one-off thing for IPO? So we have to see all those things over the next 1 to 2 quarters and confirm that this is not just a one-time thing and the company will do well. And based on that, we can buy for a long term. We can basically wait for a correction in the stock because at this price point, it is overvalued. I would not recommend buying this for long term. I will also not recommend purchasing it for listing gains if the subscription is very low. Do your own due diligence before purchasing the IPO. So this video is for educational purpose. So if you found this video helpful, hit the like button. So let's keep growing wealth together. to know more interesting investing opportunities to make money, subscribe to our channel. Let's keep growing our wealth together. If you have any questions, post it as a comment. If you want any specific video, you can again post your question as a comment or send your email to investinggurukul@gmail.com. Happy investing. Bye.